All right, so for those of you just joining us, welcome and thank you again for coming here today to discuss the basics of DPAs, what they've got in common and how they're different, and certainly what you need to know to start conversations about down payment assistance without being a program expert. My name is Will Medina from our DPR team. We also have with us today Melinda Harris, our Director of Marketing and Communication, Tracy McIntosh, our Business Coordinator, Keith Futrell, our DPA Program Specialist, a wonderful team. They'll be answering questions in the background, so feel free to use the Zoom Q&A feature to engage with them as we go. And before we get started, just a quick note, the recording of the webinar will be shared with everyone here today. So first, a little about who we are. Down Payment Resource was launched in 2008 to solve a problem that drove a lot of people in real estate and mortgage lending crazy. There was no easy way to find and track homebuyer assistance programs. So DPR stepped in and developed an easier way to connect eligible borrowers with hard to find resources like DPAs, grants, mortgage credit certificates, and other forms of assistance. We provide tools and down payment assistance program information for real estate agents, loan officers, and ultimately consumers to help all of you find and understand the down payment solutions out there for your buyers. Ultimately, we're here to help you connect home buyers to the down payment help they need. So today we'll be discussing the basics of loans, grants, tax credits, and other programs that can help eligible buyers achieve the down payment faster, cover closing costs, and get them into a home sooner than they would have otherwise. Now, of all the homebuyer programs out there, 74% are some sort of down payment or closing cost assistance. And that's really a catch-all category. We'll dig deeper in a few minutes, but it's important to know that not all down payment assistance programs are the same. 81% have deferred payments, meaning you don't have a monthly payment on the DPA loan for some period of time. 54% are forgivable, either in part or in full, essentially becoming a grant over time. And 54% are both deferred and forgivable. And then there are still other DPAs that are true grants at closing or are repayable monthly after closing. And we'll break these down further, as well as the affordable first mortgages and tax credits or mortgage credit certificates in a moment. These programs are everywhere. Some markets have more homebuyer programs than others, but there's a state housing finance agency in every state, and their programs are available statewide. So there's literally no county or market in the country where there isn't at least some kind of down payment assistance or other homebuyer assistance. So who funds and administers these programs? I mentioned every state has at least one housing finance agency. There are city and county governments, which often have community or economic development departments or housing authorities. A number of nonprofits like NeighborWorks and Neighborhood Housing Services and others operate in markets across the country with varying programs. Many employers like municipal governments, hospitals, and universities also offer their employees some form of down payment assistance. There are community action agencies, land trusts, and so many other organizations out there, all trying to open new doors to homeownership and promote housing growth and responsibility in their market, which is your market. And they've all got funded and available down payment assistance programs. So let's take a look at current trends. Demand for DPAs is through the roof. Providers are increasing assistance amounts, income limits, and purchase price limits to help more buyers in today's market. There are new state and local programs which continue to launch in markets across the country, and 81% of all down payment assistance programs are funded and available. So it is safe to say that down payment assistance is still available and not going away. In fact, our recent Q4 2023 Homeownership Program Index report showed a 6% year-over-year increase in available programs, raising the total number of programs offered to 2,294. More programs are coming to markets all over the country, offering you more opportunities to help new buyers. We also reported on growth in homebuyer assistance programs that expanded inventory options for homebuyers, which included support for manufactured housing and 2 to 4 unit properties so long as they are owner occupied. We saw a 20% year-over-year increase in programs that allow for manufactured housing and an 8% year-over-year increase in programs that allow for multifamily properties. And most importantly, our report also continues to bring attention to homebuyer assistance programs that are specifically designed to help our military personnel and veterans. Now, all of these programs share some basic universal requirements. As an example, they are only for owner-occupant buyers. These are not for vacation homes or investment properties, although in some markets, the assistance may be available to buyers of 2 to 4 unit properties as long as they will occupy one of the units. The programs also require some minimal investment from the buyer to keep a little skin in the game. This investment can take the form of a monetary investment, which can range from $5 to $1,000 or possibly more. And the buyers are also investing time, for example, by completing their homebuyer education requirement, which buyers typically complete a homebuyer education course to qualify for a down payment assistance program. And of course, these aren't cash buyers. We're talking about buyers financing their home with a mortgage, so they have to qualify for a mortgage as well. Now, with these universal requirements in mind, let's take a look at the 3 most common types of homebuyer programs and what's unique about each of them. The 3 most common types of homebuyer assistance programs are the down payment assistance program, the affordable first mortgage, and mortgage credit certificates. There are variations and certainly many other names for each type of program, and that's what we'll clarify as we learn how each one works. And remember, as we go, no 2 programs are exactly the same, but we're going to learn the basics of each type so you can understand at a glance what your options are. So let's begin with reviewing down payment assistance programs. Down payment assistance programs are by far the most common type of homebuyer assistance in most cities. Every state has a housing finance agency, which is the housing division of their state government, and just about all of them have some form of a down payment assistance program, as well as local and nonprofit program providers who offer DPAs. These programs are typically grants or silent seconds that offer down payment assistance of several thousand to tens of thousands of dollars to eligible buyers for down payment help. As an example, off to the right, let's start with grant programs, which are gifts that do not have to be repaid. Repayable seconds, funds provided at closing that may or may not accrue interest, and the loan could range from 5 to 30 years with varying repayment terms. Deferred or silent seconds, where repayment of the original amount is postponed until one of several events occurs, commonly when the borrowers sell, refinance, or there's a change in occupancy. And lastly, forgivable seconds, where some or all of the original down payment assistance is forgiven. Often a percentage of the loan is forgiven each year for a predefined number of years. For example, it's common for a forgivable DPA to be forgiven 20% per year over, say, 5 years. And often, down payment assistance programs also allow the funds to be used for closing costs, prepaid expenses, rehab, or repairs, which can be particularly important to enhance a property or accommodate livability standards for disabled buyers, and even loan principal reductions. All of these uses help the buyer shed the costs of purchasing and financing their new home. We're even seeing more programs allow their funds to be used for temporary or permanent interest rate buydowns. Now, one of the most common misconceptions about down payment programs is that buyers must be first-time home buyers. In fact, there are over 2,200 programs across the country maintained a down payment resource, and 39.7% of them have no first-time homebuyer requirement. Beyond that, most programs adhere to HUD's definition of a first-time homebuyer, which effectively states that you're a first-time homebuyer if you haven't owned a home in the last 3 years, with still more exceptions to that rule for widows, divorcees, displaced homemakers, and other circumstances. But in just about every market across the country, we're seeing programs that waive the first-time homebuyer requirement in targeted areas, or make exceptions for veterans or certain professions, or just don't have the requirement at all. Now, while down payment assistance comes in many forms, they all help the buyer reduce the down payment burden, open new doors to homeownership, and pocket a little extra cash upfront and along the way for other homeownership obligations. And many of these programs are grants, meaning they are interest-free, payment-free gifts to buyers who meet the eligibility requirements. Others may bear interest, but defer the payments for the life of the loan until sale, or even better, until the affordability period expires. So, for example, many stipulate that the buyer occupy the property for a certain number of years. That can range between 3 to 10 years, and then the lien is forgiven, essentially becoming a grant. And for those programs that are not grants, many will take second or third lien position to allow for layering of additional assistance programs. So you may be asking, what are the eligibility requirements? Most have the following limits. Eligibility depends on the program and the funding sources. Income and purchase price limits are always market adjusted, often based on calculations for the area median income, the average income of their market. But they basically all have income limits ranging from 80% all the way up to 140% of area median income, and sometimes even higher, which can creep into six-figure incomes in many cities. They typically have sales price limits too, but those are usually in line with HUD's loan limits in each market, offering assistance at or beyond median home price values. The location of the property is critical, as each program, especially at the city or county level, offers assistance within specific boundaries, such as city or county limits. But remember that the programs from your state housing finance agency offer assistance statewide, covering your entire market. We even have some nationally available programs integrated into down payment resource. Some programs have more needs-based eligibility criteria, which involve an evaluation of each buyer's scenario and assistant needs by the program administrator. Most programs will mirror first mortgage requirements, for example, requiring a FICO score of 620 or higher. Now, homeownership history makes a big difference too. Many programs are only for first-time home buyers, but there are many for repeat buyers or even current owners too. And remember, a first-time home buyer is simply someone who hasn't owned in the last 3 years. Now, I'll expand on eligibility as it pertains to military service and certain professions in a few moments, but both can open new doors to assistance that may not be available to the general public. Ultimately, these programs reduce the buying cost for a buyer and expedite their timeline by offering down payment or closing cost help that enables a buyer to reduce their out-of-pocket expenses and retain their liquid savings. Take as an example, someone obtaining FHA financing, putting down 3.5%. If a DPA program helps them bring more to the table and instead qualify for a conventional loan at 5% down, this effectively lowers the monthly payments and the long-term financing cost. Specifically, an FHA mortgage has expensive upfront mortgage insurance premiums and higher monthly mortgage insurance costs that last the life of the loan, whereas conventional mortgages have no upfront mortgage insurance premium and lower monthly insurance premiums that can be canceled once the buyer gets to 80% loan to value. When you reduce loan to value, you also lower debt to income ratios, which help more buyers qualify and increase their homeownership possibilities. Most importantly, it increases the purchasing power of a buyer's income, allowing them to more readily qualify for the home they like, and in some cases qualify for a little extra home to suit their family needs. Increased purchase power offers a competitive advantage. Of course, reducing monthly payments also allows for a little extra cash every month to dump into savings, which has been shown to improve default rates. Many down payment assistance programs require the buyer complete a home buyer education course, which provides valuable information about the home buying process and resulting responsibilities of homeownership down the road. This better prepares potential buyers for the obligations they face as owners and the steps they'll have to take to get there, ultimately enabling them to be better clients and more adept decision makers for you along the way. And more down payment providers are offering online education options for their homebuyer courses. Course material is typically in line with HUD certified homebuyer education. Most courses are simply an 8-hour class that can be completed on a Saturday or during a few evenings of online sessions at the consumer's discretion. This allows buyers to work ahead towards down payment assistance pre-approval and hit the market as more competitive and informed shoppers. Most importantly, these buyers are far more likely, according to HUD and the Harvard Joint Center for Housing Studies, to be successful owners down the road. Default rates are significantly lower when homebuyer education is completed before closing. Now we'll look at another of the most common homebuyer programs, the Affordable First Mortgage. Affordable first mortgages are additional mortgage options typically only available through a state or local housing finance agency. The most common benefits you'll see are below market interest rates, reduced mortgage insurance costs, and allowances for higher loan to value or LTVs. For example, Fannie Mae's HFA Preferred and Freddie Mac's HFA Advantage offer reduced mortgage insurance below a standard conventional product, all with a higher LTV. You can typically combine these affordable first mortgage products with down payment assistance and or tax credits from those housing finance agencies. Affordable first mortgages help further reduce the cost of homeownership for new buyers. Lowering monthly payments through lower rates or mortgage insurance pricing helps increase the purchasing power of each buyer and can potentially expedite homeownership for them, getting them into a home sooner than they would have otherwise been able to. So now let's look at the third of the most common homebuyer programs, the Mortgage Credit Certificate. The Mortgage Credit Certificate, or MCC, is available from state and local housing finance agencies in some states. Not every state offers an MCC, but if there's one in your market, we suggest you take a look. They're a great benefit for homebuyers. This offers a federal income tax credit of up to $2,000 per year. Eligible buyers must get an MCC prior to closing and then get to use it every year for the life of their mortgage. The MCC tax credit helps offset part of your mortgage insurance costs, and you still get to deduct the rest of the mortgage insurance you paid each year. MCCs help reduce a buyer's federal income tax liability by offering a credit for mortgage interest paid. Some MCC providers will allow a lender to take the MCC credit amount and annualize that over a year to increase a buyer's qualifying income. And some MCC providers will also reissue an MCC through a future refinance. So let's look at an example of how a mortgage credit certificate works. Let's take a $200,000 home. The buyer closes and makes 12 payments in the year. They've paid 4% interest, so $8,000 in interest in that year. The MCC allows you to claim 25% of the mortgage interest paid as a tax credit, so $2,000 in this example. But the homeowner still gets to claim the rest of the $6,000 of mortgage interest paid as a tax deduction every year. Here we have a recent case study actually in collaboration with Loan Depot. It details the success of originator Mosey Gatlin. They've been engaging partners to explore affordable mortgage solutions for home buyers. We have a visual regarding layering two Nevada Rural Housing Authority programs, a DPA and a mortgage credit certificate, of course, if conditions permit. The example depicts the potential savings when exploring affordable mortgage solutions for home buyers. So I'd like to wrap up this breakdown of the most common homebuyer programs with a few other scenarios where there may be additional or even unique benefits for your clients. There are many programs that offer additional or unique incentives to buyers purchasing in targeted areas, which are areas with higher foreclosure rates, vacancy rates, unemployment rates, or parts of town most in need of community investment. Typically, there will be no first-time homebuyer requirement. The assistance amount is increased, and the income limits and sales price limits are often higher. The idea here is to promote homeownership in revitalization areas, particularly so that core service providers and professionals can live where they work. These targeted areas are all over the map, not just in big cities. Targeted areas are usually bounded by specific cities, zip codes, or census tracts, or maybe sometimes entire counties. There are also special programs available in many markets that target certain professions, typically teachers and educators, police officers, firefighters, healthcare workers, and municipal employees. For example, in Georgia, the state funds the Georgia Dream program that offers $10,000 in down payment assistance to eligible buyers, but teachers, police officers, and nurses can get an additional $2,500 for a total of $12,500 in down payment and closing cost assistance. The idea behind these programs is to enable homeownership among local core service providers. And many of these programs have very broad definitions of terms like educator to include not just classroom teachers, but public school system employees at large, like paraprofessionals, librarians, school nurses, or protectors could include police officers, sheriff's deputies, corrections, probations officers, and more. Another targeted audience of eligible buyers is our armed forces active duty personnel and veterans. There are so many programs out there that waive the first-time homebuyer requirement for veterans. Some offer higher assistance amounts too. Many of these programs can be used in conjunction with VA loans and ultimately offer our veterans a little more flexibility to become buyers despite homeownership history. And some of these programs offer the same or similar incentives to active military and Guard or Reserves members. So we've given you a lot of information today, but we want you to know how to access all of these DPA programs once we leave today's webinar. So in the following slides, I'll show you a number of ways you can access DPA info and start to enhance your marketing. Anyone can go to downpaymentresource.com and do an eligibility search for free anywhere in the country to see what's out there for you or your client. And if you're an MLS partner with Down Payment Resource, we identify eligible listings in your MLS and match them to all available homebuyer assistance programs. And we provide these matching tools in your MLS agent and client portal listing reports. You also get Down Payment Connect for free through these MLS partners. So check out DPR, let your clients know what's available, and talk to your lending partners about which programs they offer. And please let us know if you have any questions along the way. As you can see, we've listed some of our MLS partners on the screen, and we are continuing to onboard MLSs, and several more will be launching DPR in the coming weeks. Now, if you're a member of one of the partner MLSs, when you're logged into your MLS, look for our down payment resource button on eligible listings. You'll see these down payment buttons on agent reports as well as in your client portals. So click it and we'll tell you or your client which programs are available for properties they like the most. Now, Down Payment Connect is free for members of our MLS. If you're an agent and not a member of one of those MLSs, you can subscribe to Down Payment Connect for your own DPA search page and lead gen tools. And loan officers, we haven't forgotten about you. We have a version for you as well, which allows you to control which programs consumers see so you are aligned with the product offerings at your company. So what is Down Payment Connect? Down Payment Connect allows buyers to complete a program search from your personalized link. This provides you with the opportunity to generate leads by engaging and educating new buyers about the down payment assistance programs in your market. You can use your Down Payment Connect link on your website, in your email marketing, and across all social media. And just to be clear, you are not buying leads with Down Payment Connect. You are taking advantage of our unique DPA eligibility platform to generate your own leads. And nobody else gets your leads, just you. So we encourage you to get creative and reach more buyers and educate them on these opportunities. We'd also love for you to join our growing, and I mean growing, Facebook group, Down Payment Insiders. There you can join over 12,000 real estate agents, loan officers, housing counselors, and even DPA providers as they all discuss best practices with DPAs, first-time home buyers, working with lenders, learning from each other, marketing ideas, and so on. You can listen in and learn or participate in the dialogue and engage with your peers. We've also seen that it's a great place to network and connect with loan officers that offer down payment assistance programs in your market. So I'd like to leave you with a case study that illustrates how important DPA info is for realtors and homebuyers. Amber here was a new agent in Florida. No one was helping her peers understand down payment requirements, as many of them began to explore homeownership. So Amber stepped in and learned all about DPAs and built her business serving those same buyers. Like Amber's clients, DPA customers become customers for life. Tell their story, help them, and they will refer their family members and their friends. So in closing, please feel free to reach out to us with any questions. We are here to help you and your clients find the assistance they need. We can be reached at info@downpaymentresource.com. So with that, we will transition into a Q&A session here. If there are any additional questions, we'll be sticking around for a few extra minutes. We are certainly grateful for everyone joining us here today. Mel, Tracy, Keith, any questions that we can answer here? Any trends you're seeing?
Yeah, hey Will. I just wanted a couple of announcements, if you will. So everyone's been sending email addresses, and I apologize for that. I just wanted to clear up any confusion there. We will be sending out the recording as well as the slides to everyone that registered, and we'll use the email address that you used to register for the session. So we have your email address, and we'll use that, and you should receive the recording and the slides. If for some reason you do not, you can email us on at the email address that's on the screen now, and we're happy to share that with you. Also wanted to say, I will post a link to our education page. I had a couple of inquiries about future sessions, so I will post a link to our education page to let everybody know how you can register for future sessions if you want to learn more. And that's all for me for now. Well, we've had some great questions. I think there's still some open. If you want to read through and try to tackle any live when we have a few more minutes, or maybe Tracy and Keith saw some things I did not. It's been busy.
Yeah, I see one regarding a hyperlink on email or a website. Any chance I can get someone on the team to answer that question?
Hey, Will, this is Tracy.
Thank you,
Yeah, I
Tracy.
wanted to make sure and point that out. So when you are a Down Payment Connect subscriber, once you log in on your main homepage, we have lots of buttons you can click on with additional information. One of them is going to be marketing resources. If you click on that and you scroll down, you can see the images that you can use to hyperlink with. But also there is an option if you're unfamiliar with how to create that hyperlink. There's an option that you can click on that will give you information right there. But make sure if you get Down Payment Connect that you click on marketing resources, because there's lots of information in that specific link that will give you images you can save and flyers and all kinds of information on how to embed this in your, like as an iframe on your own website and things like that as well. That can make life easier for you.
Thank you, Tracy. I see at the top there's a question. I have clients who are relatives purchasing together, multi-generational. Will they each be able to use separate down payment assistance programs on the home that they purchase. I'm not sure if it's referring to layering different programs, and Keith, chime in if there's anything here that you would like to add. But I know certainly that most programs require that anyone in the household be on the application. Basically, most of them don't allow for non-occupant home buyers. As for using separate down payment assistance programs, a lot of programs are very specific in terms of their requirements and what they allow, whether they allow layering of additional programs with their funds. Anything, Keith, that you believe I may have missed? Anything you would like to add?
No, that's how I'm reading that question as well. I mean, if
Okay.
whoever's kind of purchasing and apping together, they'll have to abide by any kind of income, household income totals or restrictions or whatever. So just keep that in mind. But yeah, I took it just like you. And I'd just like to say thanks for everybody for participating and all the great questions.
Absolutely. There's one regarding, does DPA lower the amount you are funded for? Again, the majority of programs do specify asset limits, and if they require some sort of a contribution prior to funding the DPA, we certainly provide that information. We obtain that information whenever we're asking for certain requirements, and there are some providers that do require, if there are funds that the home buyer has, that they use some of those funds prior. Otherwise, a lot of them have asset cap limits to where the home buyer can actually retain a lot of their savings and still use the DPA funds for closing. Let me see. Lots of great questions. Keith, anything that probably stuck out, or Tracy? Sorry, either one.
I was just going to note, we've been having some questions about the cost, if it costs to be a Down Payment Connect subscriber. And I just wanted to point out, I think that you addressed this a little bit earlier. So in case it was missed, we do have Down Payment Connect is integrated into several MLSs. So if you are an agent and you are a member of one of our partner MLSs, you have Down Payment Connect for free to you right now. All you have to do is log into your MLS, find Down Payment Resource, click on that, and you can go directly to your own Down Payment Connect page that's waiting for you. If you are not a member of an MLS to get that for free, one of our partner members, or if you're a loan officer, we do offer it to you at a minimal cost per month. It is $24 per state per month for an agent version and $39 per state per month for a loan officer version, because there are different accessibilities for the loan officer version for you. You can locate that on our website at downpaymentresource.com if that is something you're interested in signing up with on your own separately from your MLS.
Thank you, Tracy. There's a question at the top. Is there more teaching on this and how it works for clients? Certainly, these webinars are hosted frequently, and for those of you attending, as mentioned, you'll receive a copy of this recording. But we also host these recordings on our site or even on our YouTube page as well. So always an opportunity to revisit the content. I also know that if you are a part of a partner MLS, there are certain trainings sometimes that are hosted. So we are definitely big on revisiting this content for you and your clients often, so that way you're always up to date to any changes that might be occurring. Great question.
Hey,
there's
Will?
one regarding program. Oh yes, please.
Oh, no, I'm sorry. I just was going to say, I wanted to clear up. We've had a couple of, and you guys, this is a great question. We get it all the time. Agents asking about loan officers that do down payment assistance and kind of what are the next steps with these programs. And I just wanted to point out a couple of things. So when you do searches for programs on our site, or in search results on our site, we are always going to have a list of the program providers approved lenders. So most program providers are going to have participating lenders that they will encourage you to use to participate in their program, and we do include that. But we've also had some questions around, if I'm using Down Payment Connect, for example, and, Jennifer asked in the Q&A. So she's with One Key MLS and her, buyers filled out the form and they have these results, which is great. But she wanted to know what are the next steps, which is an awesome question. And essentially the next step is to connect with a lender. Jennifer, in your example, we're certainly not trying to make loan officers out of real estate agents. But we do want to empower you with this information so that then you have it, you can share this with your lender partners. Again, in those search results, we're going to have links to the participating lenders for each of those programs. So you'll have access to that. If you don't have a lender that works with DPA, for One Key, I would definitely start with Sony May. Look at their approved lender list. You're going to have loan officers there that are going to be very familiar. And if they're familiar with state programs, they're more than likely going to be familiar with local programs as well. So I would start there. But yeah, I just wanted to clear that up. And again, we get that question a lot, and it's a great question. So that I just wanted to point that out.
Thank you, Mel. Much appreciated. I see that there's another question to answer live regarding available programs for the credit challenged. I have a few people who would like to purchase but are unable due to credit. Any assistance with those? Certainly, we've seen a lot of programs where if the applicant does not meet the requirements, the programs themselves actually offer some level of assistance to kind of build up credit, so to speak. So the applicant will spend, a few years with the organization, working on credit building techniques and so on. As well, because most clients have to go and get approved for their first mortgage. Certainly, I know that there might be some lenders perhaps that also know of other credit building assistance programs. That is a great question, and obviously, because much of what we do is research a lot of these programs, we always track trends to see just what adjustments program providers are making to truly help home buyers. So thank you for that question. How do I get a list of lender
I'd like
providers?
to chime in real quick.
Yeah.
We've had people ask questions about how to find a lender, right? So if you're an agent and how to find a lender that works with down payment assistance programs. First of all, our chat here, I'm sure that there have been several people that have put in there that you're looking for a lender and you can communicate with each other through that. We've seen that happening. There are several ways in which you can do this though. So first of all, a good starting point is to visit your state HFA's website. Find their list of participating lenders, which means that they, at the very least, participate in the state HFA, like in their first mortgage or other DPA programs. So you can start there. Also, the search that is performed, the eligibility search, those results will be emailed. Once you get a copy of that email, you will see links for each of those down payment assistance programs. Once you click on that link, you can see a participating lender list, and that's that down payment assistance providers list, and not our list. It's their list of approved lenders for that program. So you can look through that list. And lastly, I want to point out that if you join our growing Facebook page, Down Payment Insiders, that is a great way to join in there, do some outreach, and see if you can find lenders in your area that participate and are familiar and comfortable with down payment assistance programs that you can team up with and you can refer your home buyers to. So that's a common question we get often. It's lengthy response. So I wanted to go ahead and throw that out there to everybody in case you guys are wondering the same. Oh, the Facebook page name. I see that, Sue. It's Down Payment Insiders. And actually, Mel just dropped it into the chat. So you can copy that if you'd like.
Thank you, Tracy, Keith, Mel, everyone. And thank you again to all of our attendees. Certainly, it's been great seeing all the questions and Q&A and chat. I will say, if we were unable to get to your question today, please feel free to submit them to info@downpaymentresource.com. Again, we are grateful for everyone attending here today. Any final words from the team?
Nothing here, Will. Just again, thanks for everybody for participating.
Yep, same here. I don't really have anything else, but as Will said, if you have any questions, send those to us at info@downpaymentresource.com and we'll get back to you as quickly as possible. But thank you all so much for joining us and for your input today.